Welcome to the live stream. Welcome to Sunday morning. We have an ex-presidential candidate, actually two-time ex-presidential candidate. He's also a finance industry legend. He's also a multi-millionaire. I thought he was a billionaire, but I was wrong upon research. He's worth about $450 million. He's talking about the world lurching towards the gold standard. Guys, this means 10,000 gold easy. I saw Lynette Zhang on another video just earlier in the week talking about $60,000 gold. We're going to dig into what he's saying and why it's so important to us as precious metals investors. I want to say hello to Annie Oakley. Thank you for being here. Thank you to all the moderators who help out. I saw Snakebite. I saw Neil Hahn. And I saw, who else? Oh, Cliff Moberg. So thank you guys for being here. Let's dig in right away. But before we get to this gold standard, big news. This is shattering a lot of people. This is mainstream oriented. Let's touch on what we woke up to yesterday, which was a major bank failure. Now, people are saying, oh, a bank failed. It wasn't as large as some of the banks we had a year ago, but the big fear is that this is the first domino to fall. And we're going to go take a look once again at, hold on, here we go. I've got this highlighted for us. We need to revisit this. The gray section right here sums it up. Again, from Zero Hedge, Republic Bank had about $6 billion of assets and $4 billion of deposits at the end of January, according to the FDIC, also known as, hold on, what happened? Here we are. Also known as the FDIC. The FDIC estimated the failure will cost the Deposit Insurance Fund. This is big fact number one we need to remember. Almost $670 million. I'll slow down. As the Wall Street Journal reports, they'd struggled for months to stay afloat. Around half of the deposits were uninsured. Big thing, okay? Half of these people had uninsured deposits with the bank. In total, equity or assets minus liabilities was $96 million. But here's the big thing. This is where we need to pay attention, guys. This is where the dominoes fall. That excluded $262 million of unrealized losses on bonds that it labeled, quote unquote, held to maturity, which means the losses had not been counted for on its balance sheet. It make-believe Disneyland accounting, like I called it yesterday, but this is massive, guys, because this shows us it's not just Republic Bank. It's all the banks are in the same situation. They've got a bunch of unrealized losses on their balance sheet. Okay, it'd be like if you came to me and said, Ron, and I was a bank and said, Ron, here's $100K. I take your $100,000, buy some bonds, and over a 2-year, 3-year period, they drop in value by 30 or 40%. So now, instead of having your $100,000, I only have $60,000, and that's all good and dandy until you show up wanting your money back. And I say, oh, I have an unrealized loss on my balance sheet. This is what's going on across the banking sector. Are all the banks insolvent? I've heard a few people throw out that blanket statement. I won't say every, but I'm telling you, there's a good amount. And some smart people are saying all the banks are insolvent. You know, as long as everybody doesn't show up and want their money, it's not a problem. But the reality is, if they recognize the losses that they have right now on the investments they've made, they are in big trouble. Okay. And here's the thing. Here's the zinger, the double zinger on this. Rates are not going back down. The reason why we have this issue with the banks is because rates went up. Guys, rates are not going down. Don't believe it, okay? They cannot lower rates. Nobody will buy the government debt. Remember the U.S. debt clock, 34 point, maybe we'll go look at it. It's been about a week, $4.8 trillion. Here, let's run out there and take a look. This is why, very clearly, they cannot They cannot raise interest. Oh, 34.7 trillion US dollars. That's only 100,000 per US citizen, as you can clearly see. Or if you pay taxes in this country, that's equal to over $250,000 of debt per US taxpayer. They can't raise rates, okay? And they can't lower rates. They can't raise rates to fight inflation, because the whole system implodes. $300 trillion of debt in the world, 3 times the world GDP. It's unbelievable. Are they going to lower rates? Lower rates would perversely help the banking sector right now. It would make the value of all their bonds go up. No, they can't lower rates. Right? Again, they can't lower rates because nobody will buy the bonds, and that will create hyperinflation, massive inflation. We saw what happened 2 years ago. Larry Summers, the 71st Treasury Secretary of the United States, said it himself. We had 19% inflation. They are in a box, and guess what? More big news. And don't worry, we're going to talk about that gold standard. This week, we get to hear from our old friend Jerome Powell from the United States Federal Reserve, May 1st, which is probably Thursday. I don't have a calendar in front of me, but he's going to tell us about how they're monitoring the situation closely and blah, 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 right? Remember the Charlie Brown teacher? Yes, that's what we're going to hear out of them. They are in a box. He is up a creek without a paddle, as they like to say here in Missouri, where we have lots of creeks. They are not going to be able to deal with this situation. Okay, rates. I don't know. They may lower rates, whatever whatever BS they come up with. But basically, no matter what they try to do, they are in a precarious position right now. That's the fact of what's going on. Let's talk about this finance legend who's talking about the gold standard, and let's hear what he says, because this is fascinating. I'm going to read to you some of the clips. This came from Steve Forbes. He's the editor-in-chief at Forbes magazine. You've probably heard of that. He's a 2-time presidential candidate. He's a very smart guy, very much respected. Very much. Is Forbes not mainstream, like the most mainstream? What's it mean when mainstream media is talking about gold? What does it mean when they're talking about silver? That means, guys, we are on the cusp of a new day for silver and gold investors, okay? It's hard to believe. This is what he said. But the world is lurching towards a new gold standard. No monetary system is held in such contempt among all economists. Thank you, Steve Forbes, for saying this. Held in contempt, silver and gold, amongst all economists and financial officials today as the gold standard. And isn't that the truth? We know the Fed hates gold. The U.S. government, the federal government hates gold. What about local states? What about state by state? What about the 50 states here in the United States who our founding fathers protected with the United States Constitution and wrote silver and gold into the United? That's a different story. You may live in a state that's helping to protect you, right? Go check out Citizens for Sound Money. Go check out the Missouri Freedom Initiative. Guys, it's happening little by little, chip by chip, okay? But on a federal level, like Mr. Forbes says, the government hates silver and gold. This is great. The United States was on a gold standard for 180 years, Mr. Forbes said. It worked pretty great. Very little inflation, right? Because when the money is tethered to silver, when the money is tethered to gold, I got a gift in the mail I'm going to show you. It came yesterday, coincidentally, and fits in awesome with what we're talking about. We've got a box to open, basement dwellers. And thank you, by the way, for being here. It's time for me to butter you up. It's a big deal when you come join me in the basement. Okay, you, I'm talking to you. There's only one you are the most important part. This is not possible. It's not RonTube. If it was, it'd be just me. So thank you for being here. Please give this a thumbs up. Subscribe to the channel if you want to get an interesting piece of content every single day about silver and gold. And it's free. And super chats are always super appreciated. Where was I? The gold standard worked really well for 180 years. Worked pretty great, right? No inflation. And the greatest economic growth in the history of the world. Wait a minute. Did he just say that? Did he just say, right, that when the United States was on the gold standard for 180 years, we had very low inflation? Maybe, hold on a second. Hold on. Maybe Mr. Forbes needs to have lunch with this guy. Yeah, we'll see you Wednesday or Thursday, whenever, right? Jerome, when we were on the gold standard, we had very low inflation. But wait, Jerome, there's more. We had the greatest level of economic growth in the history of the world. Somebody riddle me this. Why aren't we on the gold standard anymore? Oh, that's right. In 1971, President Nixon took us off the gold standard. And since then, right, the value of the dollar, this thing, right, has gone down. Woo, bye-bye. 98%, 99% against gold. But wait, there's more. Let me show you something interesting. I got a box. This came yesterday. Okay. And there's something in there that will demonstrate to us exactly what Mr. Forbes is talking about. I took some pictures to make this easy. Hold on here, guys. I'm going to show you what showed up yesterday. This was awesome. This made my day. There we go. Got this little box with this inside of it. I wonder what that is. I bet you're wondering what that is. It says a silver certificate were a type of representative money issued in the United States between 1878 and 1964. You could take your silver certificates. They look a lot like dollar bills, don't they? But wait till you see this. To any bank in the United States of America and exchange the certificate for silver coins, including silver dollars. Note at the bottom of the certificate that it clearly states in silver, payable to the bearer on demand. And I want to say, before I forget, thank you to Gary for sending me this. Gary, that really made my day yesterday. So thank you, my friend. Hold on. Let's take a look. Oh, there it says right there, $1. But it also says in silver, payable to the bearer on demand. Can you imagine that in this country, we had a situation where the $1 bill was actually backed by silver? Really? Oh, okay. But that didn't work out so well. We just had the greatest period of economic expansion in the history of the darn world. Are you kidding me? Oh, and by the way, we had very little inflation. Sure, we had ups and downs. We actually had economic cycles that helped cleanse the business community of non-performers. They were called recessions and maybe even little depressions where people learned lessons. Not like 2008, right? Where the bankers should have been, some of them should have been put in jail and some of them should have lost their jobs, but instead they got bailed out by the government and they got big bonuses on top of it. I digress. I'm sorry. He also sent me this Morgan dollar from 1878, and it is absolutely beautiful. And I love Morgan dollars. So again, thank you, Gary, and thank you for this demonstration for our viewers to see visibly. Let's go back one more time, guys, and look at that. $1 right there. Here, let's look at the new dollar real quick. Let's remember this. Take a picture in your mind. It says Washington, $1 in silver, payable to the bearer on demand. And now I want to show you this. Notice anything? They took that part out underneath $1. It no longer says payable in silver to the bearer on demand. But let's get back to our friend Steve Forbes and talk about $10,000. $10,000 gold. Keith Neumeyer's $100 triple digit silver. It gets more interesting. Real money. Since we went off the gold standard, this is according to Forbes, average growth rates in the United States have fallen by 1/3. If we'd stayed on the gold standard, median household income right now in the United States would be 40% higher than where it is. Okay. But, and I wrote this part in, fiat, paper, unicorn, farta, central banking, world has massive disdain for gold and silver. Remember that, guys. We have been, oh yeah, we have $2,300 gold. Let me remind you, we have $27 silver, which isn't great, but good. Okay, we'll say good. All right. And we're fighting every headwind known to man, including the entire financial system, economic establishment pushing us down. And that's all they got. Like, they're giving it all they got, right? And gold and silver are hanging in there and doing pretty darn well. Okay. Do you ever wonder why? And there are big signs of change. This is where it gets super interesting. Before we dive into that, let's say thank you to channel sponsor Pimbex, Pimbex. Fun to say, fun to smell, smell, fun to say, fun to smell. This is live. I apologize. Fun to say, fun to spell, even more fun, right? To get more metal for your money. To me, that's really important when I'm buying silver, okay, or gold for that matter. I'm more of a silver guy myself, but nonetheless, I love gold. You know that. But the key is you want to work with a company you can trust. Check. You want to get a great product. You want to get great selection. Check. And you want to get the most metal that you can for your money, right? And with a company that you believe in, a company that you can establish a relationship with. So many of you have written to me telling me about your great experiences with Pimbex. So if you have not tried Pimbex, or if you're new to getting into give them a call, right? I'm not telling you what to do. Just consider Pimbex next time that you're going to buy silver or gold. I think you'll find what I found, but you need to find that for yourself. Do your own due diligence, but I do think you'll find that you get more metal for your money and a great customer experience. Now, let's move on. There's signs of change in the world, according to Steve Forbes, former presidential candidate, $450 million man, right? Finance legend. Okay. The world central banks purchasing gold at record rates. Thank you, Steve. We knew that already. China, Russia, India, Poland. But the key here that he points out, everyone beginning to doubt the value of the dollar. I don't like it. You don't like it. We're Americans. I've got American flags. I don't like what our government has done since 1971 to the dollar. And it's okay, because we have this thing called the Constitution, which grants you and me freedom of speech. We do live in a country where we can disagree verbally with what our government's done. We don't like it, but countries, the world is doubting the dollar. No doubt about it. Okay. He talks about crypto. He brought up a really great point, because people say, well, Bitcoin's going to take over. Bitcoin's going to be the new, world reserve currency. He said crypto is not stable. Can't be used in things like long-term contracts, because, and his point that he's making, I'm not anti-Bitcoin, I'm not anti-crypto, I'm not anti-blockchain. I'm just telling you what he said, which did make sense to me. Companies, individuals might be a little leery of getting into long-term contracts, like a 10-year contract with Bitcoin, because they don't know is Bitcoin going to 1 million? Is Bitcoin going to go back to 17,000? Right? So if they make a contract, a long-term contract, and say, well, I'll pay you, 2 Bitcoin a year. Well, that could either for the next 10 years, that could mean either $2 million per year, or it could mean $20,000 per year, depending, because the price has been so volatile. I never really thought about that. Like, the business community is leery of embracing it because of that factor alone. Okay. The wild price swings, unbelievable. Okay. Governments, Mr. Forbes says, right now around the world are floundering with monetary and fiscal policy. Like we talked about earlier, the world has $300 trillion in debt, 3 times the global GDP. And then we have everything going on with the BRICS. Everything going on. Every day we're getting a new story about the BRICS countries, expansion within the BRICS countries, moving away from the dollar. Now, look, I'm not going to tell you the dollar's going to go away tomorrow or next week or this year or not next year. It likely will be a very slow process. But one thing we know for sure, the de-dollarization process has started and is moving, right? How quickly it happens. I mean, we could have an event. We could have an event tomorrow. You never know, right? I'm not predicting that. I'm not saying the sky's falling. I'm not saying we're all going to be walking around like zombies trying to buy bread with little 1/10 ounce silver pieces or anything like that. But we do know that the de-dollarization process has started, and Mr. Forbes points, he says, big shifts. This gets interesting. Big shifts. India is experimenting. I didn't know this. Excuse me, with gold-based government bonds. Did you hear that? Gold-based government bonds. No offense, but Bitcoin people, but not Bitcoin-based government bonds. Monetary expert Nathan Lewis said the following. He said the gold-backed bonds would likely be very popular. From the start of the floating currency period in 1971, a gold bond, okay, if they'd had gold bonds paying 4%, would have outperformed every bond out there in the market and even the stock market, worldwide stock market returns. Then they point out Zimbabwe is the poster child, right? The poster child for what's going on. They had runaway inflation, currency crisis like nothing before. Now they have moved to a gold-backed, central bank controlled, gold-backed, gold standard currency called the ZIG, Z-I-G. It's a sign of things to come, according to Mr. Forbes. Okay, now let me just read you a couple recent. This is the last 2 weeks. Zimbabwe is on the gold standard, and here's what we're hearing. This came from Bloomberg. Kenyan President William Ruto hailed Zimbabwe's gold-backed currency as a potential driver of economic recovery in the southern African nation. Fitting to use mineral wealth to back local units, he said. Zimbabwe's new currency is a step toward eventually abandoning the use of U.S. dollars in the economy. Let me back up. Zimbabwe's new currency is a step towards eventually abandoning the U.S. dollar in the economy. Vice President Constantino Chawinga said, he's from Zimbabwe. The nation is going to intensify its monitoring of gold mining to boost its reserves. Chawinga tells business leaders that the ZIG, right, the Zimbabwe gold-backed currency is here to stay. But what else are we hearing, right? Okay, Zimbabwe, right? What about Thailand? Did you hear what Thailand is doing, right? Thailand is a big growing country. I've actually been to Thailand. I spent a month in Thailand. My friend's a college professor over there. It was right when I met Susie, before we were married and had kids. Thailand, we have these preconceived notions about Africa, parts of Asia. Bangkok is a crazy big city, big business, big money. What are we learning from Thailand? What are they doing with gold? Let's go check this out right now. From the Bangkok Post. I read that when I was there. And from our friend John Little at the Silver Academy. There's a link to that in the description of this video. Government pension fund. This is from Thailand. Government pension fund expects to shift focus to gold, oil, to mitigate risk. The $35 billion Thai government pension fund, GPF, has strategically shifted some of its assets to gold and oil. This move is aimed at mitigating geopolitical risk and market uncertainties, a strategy that the fund believes will safeguard its portfolio. Does that sound familiar to you, basement dwellers? Don't we maybe move part of our personal pension funds into precious metals? I like some silver, and I like gold mining stocks, that's for sure. Isn't that what we do? Hey, while we're talking about that, we're going to come back to this. Hold on a second here. Hold on a second. Let's say thank you. Please help me say thank you. Channel sponsor, First Mining Gold. They're a gold developer, 2 multi-million ounce, big projects, development stage projects in Canada. The big miners like Newmont. Did you hear about Newmont Mining? Blowout quarter. The stock exploded, right? Well, let me tell you something about Newmont and Barrick, these big gold mining companies. They've not been investing in their future. And every time they dig up an ounce of gold, right, that contributed to that recent blowout quarter, they've got to replace that. And they haven't invested heavily in exploration or development for the last decade. They're going to be facing a crisis in the coming years, and possibly that could be a huge benefit to a company like First Mining Gold, who's got big projects that they're moving through the development stage project. You can learn more about them at firstmininggold.com, and our friends at Fortuna Silver, Gold and Silver Mining Company, operations in Latin America and West Africa. You can learn more about Fortuna Silver at fortunasilver.com. Let's get back to this quickly. The strategic move by the Thai pension fund is a proactive response to mounting concerns over wars, elections, and interest rate uncertainty. It's a testament of the fund's astute management. By diversifying away from capital markets and shifting assets to gold and oil, the pension fund aims to protect its portfolio from the impact of these geopolitical events and market volatility. The exact percentage of assets allocated to gold and oil was not specified in the reports. Okay, interesting times. Let's talk about one of our favorite subjects here, basement dwellers, skyrocketing. We started talking about $10,000 gold, right? $100, $150 silver. You and I have been talking about this for over a year. Stagflation, okay? Jerome Powell being in a box. We have beat the table over and over that we're moving into a stagflationary environment. That's when last time we had stagflation, silver went from $1.50 to $50 per ounce. What is that? That's more than 25 times. That's like $700 silver from where we are right now. I'm not saying for sure that's going to happen, but I am saying for sure, very confidently, that we're moving into stagflation. Let's hear what Dave Erfley, I've got two paragraphs Dave Erfley put out in his weekly column, and he talks about Jamie Dimon. What did Jamie Dimon from JP Morgan Chase, did he say something about stagflation? Right? Don't forget, that's rocket fuel. Okay, here, grab yourself one of these. Right? Here's a silver dollar. Grab yourself one of these and imagine it going up in value by 10 times, possibly 5 times, 4 times, 25 times, 30 times. Look, anything is possible. I know we've been beaten down so bad. That's stagflation, is the rocket fuel that gets underneath that. Let's hear this out, okay? Dave said both the U.S., this is what happened last week, U.S. GDP and PCE reports released ahead of next week. Wednesday's FOMC meeting reflect that the gold price, what the gold price already sniffed out. Gold sees around the corner, silver see around the corner. They look out into the future. They are the oldest, wisest, smartest markets in the world, okay? And that's what Dave says. They sniffed it out. The world's largest economy is heading into stagflation. As the government raising taxes has reduced GDP, while inflation remains well above the Federal Reserve's mandated target of 2%. They're only supposed to steal 2% of your money per year with inflation. They've been doing a little better, 3 and 4%. Heck, one year, according to Larry Summers, 71st Treasury Secretary of the United States, they took almost 18% of your money away. Don't you feel it when you go to the grocery store? Don't you feel it? I took the girls to Six Flags yesterday. The little bowl, I mean, like this big, I'm not joking, of Chinese food, $20. I know Six Flags is a ripoff anyway, but you know what it's like at the grocery store. The groceries are twice as much as they were 4 or 5 years ago. Right? I go to Aldi. I mean, it's at least 80% higher than it was 4 or 5 years ago. I digress. Let's talk about JP Morgan and Jamie Dimon. What did Jamie Dimon have to tell us about what's going on in the economy and the price of gold and silver and stagflation? At the Economic Club of New York on Tuesday of last week, JP Morgan Chase CEO Jamie Dimon warned investors, about a period of stagflation. He said, quote, stagflation has the negative effect of no growth and inflation. That hurts profits. Remember that. Hurts profits. Remember that. Okay. And consumers and jobs. And yes, I think there is a chance that could happen again, he said. He says he worries. Jamie Dimon's worried. Oh, poor Jamie. Well, you get worried about your $390 million bonus you may not get over the next couple of years, Jamie? Huh? Jamie's worried that it looks like, oh, wait a minute. Let me do that over. Jamie's worried. He says, I worry that it looks more like the 1970s than we've ever seen before. Did Jamie Dimon just say that? Huh? Jamie Dimon from JP Morgan Chase, right? The cruelest manipulators of the gold and silver price on the COMEX and the LBMA in the history of the world. They've been convicted. They've paid fine. Did he just say that? That it looks like the 1970s? Did Jamie tell us he's worried? He might be worried about his bonus. That's all right. They can manipulate the gold and silver price for you, Jamie, generate a little extra profit, right? Guys, this is what's going on. But let's go back. Remember, I told you to remember, he said, that hurts profits. So bear in mind something very important about gold and silver. Okay, we're going to pull something up here. Hold on 1 second. Here it is. And here it is. Remember what he talked about. It hurts profits. Okay. Right. Well, up here, right, all this make-believe, right, that all that make-believe money that's based upon gold and silver. This is John Xter's pyramid. For those of you who don't know, John Xter worked for the New York Fed for like 20 years, and he's only been dead for like 15 years. He spent his career preaching about this. Gold and silver, look at the bottom. Those are the only forms of real money. Everything else is synthetic, right? Including stock prices. So when we have, and I don't know why they don't put stock prices up there, because that's, whatever, that's part of this pyramid. When we have money, when people wake up and realize that we're not in a 0% interest rate environment anymore, that we're in stagflation, and big companies, right, are going to be dealing with a slowing economy while at the same time rising cost, their profits are going to get squeezed. People are going to wake up. It's going to take a while, but it's starting to happen. They're going to wake up and take their money out of the stock market. And that's going to feed more down to the base. And remember, this is tiny when compared to what we have in the overall, the gold and silver market. The total, I read recently, total gold value in the world right now, $15 trillion. Total silver value in the world right now, $1.5 trillion. But I'm hearing other people, John Little had something the other day that said it was like 260 billion. I don't know, right? We don't know for sure, but we do know one thing for sure. I got to pull it up one more time. It's one of my favorite things to look at. That bottom part, gold and silver, is tiny when compared to the bond market. I mean, like less than 1% when you compare it to the derivatives market, the bond market, the stock market, the bank, all the bank money, all the base money. That, my friends, is an absolute fact. Let's have some fun talking about Costco. I caused a little trouble in the Facebook Costco community. Let me see if I can get you guys out here to take a look at this, because it's interesting. And man, are people clueless. So this is the St. Louis Costco Shoppers Club, and some guy put this out there. He said, currently at South County, that's South St. Louis County, Gold Bar, $2,399. Okay. And then there were all types of comments. Oh, I called them. They don't have them, blah, 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 blah. And then some people were like saying, don't buy gold, don't buy gold. So I made a comment here. I said, yes, definitely stay away from gold and silver. Right. Well, anyway, yes, definitely stay away from gold and silver. They've only been valuable for thousands of years in every corner of the planet. It's much better for you to store your wealth in paper money. It has such pretty pictures of ex-presidents, and you're guaranteed to lose about 3% minimum per year. Steer clear of gold and silver. Ha ha. Obviously, that was a joke. And I got a couple of messages from people telling me that knew, that thought it was funny, but I'm going to show you some of the, sorry, I couldn't help myself. He said, and I can't, that was edited out of there. This guy brought up a good point. Can be passed on to others without the government taking a big bite. These are Facebook people in a Costco environment. But here's where it got interesting, where I saw the misconceptions. This guy says no returns. Like, oh, if I buy it, I can't bring it back in 3 months and return it. Well, no, Eisenhower, because gold's traded on a market. So if you buy it today, when the spot price of gold is $2,333 and the price drops by $300, you can't bring it back. And I mean, wouldn't that be nice? That was an interesting thing. Somebody asked if there's tax on it, but there was another one. Oh, this one here, this guy, Govind Randgrass. He said, also, you'll never be able to sell it very easily. And look at the replies they got from that. And this guy says, Chris Lee, that's the reason I haven't gotten into it. You have to know the right buy and sell groups. Blah, blah, blah. The biggest advantage is you pay capital gains, long-term tax, which is better. But some other people chimed in here. This guy said, I've never, ever, ever had trouble getting spot price. Easy to sell. Two misconceptions. Number one, why can't I return my gold or silver after I buy it to the merchant? I mean, come on, man. The other is this conception, and I'm hearing people say this more and more, and they're going to learn. They're going to learn one way or the other that you can't, you can sell your gold. There's been a market for gold on this planet for thousands of years, everywhere on the planet. Is the economy crashing? I'm going to ask you, are you seeing? Tell me where you're from. Let's do it one more time. Put where you're joining us from in the comments. I want to hear where you're from. Are you noticing? Yesterday, I took the girls to Six Flags. We're leaving Six Flags here in St. Louis. There's a road you go down in Eureka, Missouri, where there's every restaurant known to man, every fast food restaurant, and just every middle, anyway. There was a Burger King that closed recently, and there was also, I think it was called Super Smokers, like a big chain of what do you call it, like a smokehouse type restaurant that was really successful, closed their doors, and several other. I think right now, think about this. What we're seeing right now, and I'm hearing Red Lobster. Remember, we talked about the big RL. That's what Susie and I used to call it. Red Lobster is facing bankruptcy. Right now, people, middle America, can't afford. We're seeing it, right? They're cutting back massively. They can't afford to go out and spend $100 to feed a family of four at a restaurant. They can't even afford to. I heard yesterday somebody talking about fast food prices have almost doubled in the last 3 years. McDonald's prices, Burger King, people can't afford this. I'm telling you, and I don't say this very often. I don't make predictions, and I definitely could be wrong, but I feel like right now we are on the precipice, right? This big slowdown, this recession that was supposed to hit, right? People thought, they predicted it in 2023, never happened. Now everybody's like, I don't think a recession's ever going to happen, right? The Fed's I think we are right on the precipice, right on the edge of hitting sometime in the next 4 to 6 months, the reality that the economy's slowing down. My buddy Jim that builds big big in-ground pools, he says, whoa, things have really slowed down. People that I know that are in the home improvement business, right? People aren't spending $4,000 to put gutter guards on their house. People aren't spending $25,000 to get to get their kitchen updated. People aren't spending $23,000 to get a bathroom remodeled. Things are slowing down. And man, when it does, look, we know we choose to protect ourselves with silver. We choose to protect ourselves with gold. Oh man, I forgot. Does anybody else feel it? Yes. Or am I wrong? Right? Did I forget Northern California. California gas is $7 per ounce. Raven, our friend Raven, is in Texas. Man, you guys are joining from all over the country. Thank you very, very, very much. All right, guys. Thank you for being here today. Have a great Sunday. I'll be back tomorrow. You are important. Be nice to yourself. Okay. That'll help us all be nice to our other people around us. Please support the sponsors if you choose, right? I'll never tell you what to do, but I will tell you what to do about this. Have a great day. Like I said, and I'll